This is Cece. Welcome to the Orbit. It is Thursday, January 11th. We had CPI hit this morning before the open. Stocks are down in the red slightly from being up into the green into it, but not much. And it was a hotter than expected CPI, but again, not much. But it's enough to have yields slightly higher, stocks slightly lower. We've got the dollar moving. Several things happened on the print. Now, options were expecting a little bit more volatility off of the number. We are looking at a 0.6% expected move for today. That compares to about a 0.4%, which is as low as you ever see it for zero DT expected moves that we had been seeing the last 2 weeks or so. We had started to see a little bit of intraday volatility the last couple of days. Some of that intraday volatility, and it's sort of obvious why that would be happening on these charts, is the market is trying to break out, and it could either fail or it could break out or it could continue to go sideways. So right now we're kind of going sideways with a little bit of up and down volatility. So vol is essentially correct. Now a breakout to the upside or a failure here to the downside, and a lot of the indices and a lot of stocks look like this on the chart, then you would see, obviously, if you saw the market fail here and break down over the next couple of weeks, especially during earnings season, you will see volatility pop. And to the upside, you start to see people start to reach for calls and things like that. And you also kind of see a little bit of volatility injected into the market. And that starts to show up in, maybe a VIX going from 13 to 14 and a half or something. Nothing dramatic, but you do see it. And then you especially see it in some of the small cap stocks. You see it in IWM, things like that. Of course, we have earnings coming up, and let's just check in on some of the expected moves for tomorrow morning. We've got JP Morgan down about 0.5% pre-market. The expected move for tomorrow is about just under 3%. Let's look at Wells Fargo, 3.1% expected move. Let's just look how that looks on the chart. Same thing, this flag forming, stocks are going sideways, but look at this rally that we saw into this print. This is the story of the market in so many charts right now, is we're kind of going sideways. The market's trying to figure out if this is a true breakout or if this is a head fake and we're going to go lower. Looking at some trades here in Wells, let's just look at an iron Condor, see kind of where the strikes are and what the risk reward is. So you got about a 47.5 short strike to the downside, 51 to the upside, risking about 26 to make 74. Have been talking about is that going out in time a little bit on the chain, going out here into sort of February and March. If you are somebody that is long a stock like Wells Fargo, obviously there are some inexpensive put hedge type positioning that you can put on without getting penalized for high IV or even time. And then if you are obviously positioning for a breakout, going out into March, you are not being penalized much at all. So just, looking at like a call spread here, 50, 52.5. I mean, that just shows you how low volatility is. That's just a 2.5 wide spread. If you wanted to even take that up to, let's say, 55, $5 wide March, we are only risking 125 to make 375. That is the type of risk reward you are going to see at this low volatility. And you can see that would not take much. So, from the debit spread side of things, positioning, lower, bearish, hedging lower, or bullish breakout, if those are your sort of thoughts right now, you can be looking out a couple of months for very inexpensive. I mean, this costs $1.25.